Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka.
And I'm Santosh Nair.
Well, Santo, what started out as a very quiet session did pick up pace towards the second half of the session, and it's evident by the fact that we did come very close to, in fact, we even reclaimed that 19,400 mark briefly, but we've just about ended shy of that point by 7 points or thereabouts. If you look at, the sectoral movers, IT, metals, these were some of the pockets that rallied in trade, and let's also look at some of the top gainers on the index. In fact, I want to also mention that almost all the sectors were in the green, barring the PSU banking as well as energy pockets. On the Nifty, you had the likes of Adani Ports, Bajaj Finance, Power Grid, Hindalco and Airtel. These were some of the top gainers, but what wasn't doing very well from the large cap end was Reliance Industries. That was the top loser after, of course, Jio Financial made its debut today. M&M, BPCL, Britannia, Maruti and SBI. So some of these heavyweights were not doing all that well. But from the broader end of the markets, I think the mid-cap index was outperforming today, Santo.
Well, very clearly, the investor focus at this point seems to be on the second line shares, which have been delivering better returns of late. And that trend continued to persist today also. Right from the start, in fact, we saw mid-cap and small-cap shares find takers. Among the key highlights of today's trading session, Jio Financial listed at 262 rupees a share, but ended close to about 5% lower. Jio Financial will continue to be part of the FTSE indices, and it will also be included to the MSCI standard index on August 23rd. Now, Nandita, we are talking about the interest in mid-cap shares. Now, clearly the earnings season has been better than expected, or at least not as bad as what the market was fearing. So probably that's one reason why you're seeing good interest in the second line shares. In stock specific moves, we saw PNB Housing rallying on the recovery of a 784 crore corporate NPA. KC International won a 1,000 crore order, and you saw a good run up in the stock price. Murugappa Group stocks too were in the limelight after the settlement of the dispute with one of its family members, Valli Arunachalam. Bharat Forge hit a fresh 52-week high today. Tanla Platforms was under pressure after it ended its pact with Vodafone Idea. Indocount hit a 52-week high on ICICI Securities initiating coverage with a buy rating on the stock. And among the Nifty 500 gainers, we had Tamil Nadu Mercantile Bank, NMDC Steel, that is JBM Auto and Trident. Well, among the losers, we had Tanla, Brightcom, MTAR Tech and Suprajit.
Right, so that was the action from the mid-cap end of the markets. Large caps too did well, barring a few which I obviously already pointed out. But on that note, let's take a look at some of the stocks that are on our radar this afternoon. Starting with Titan, Santo, this news broke out after market close on Friday. Titan has bought another 27% stake in Carrot Lane, in which it already had a 68% plus stake earlier. And now this acquisition has is worth 4,600 crore rupees. There was some concerns about how the company will be funding this acquisition, and the management was on CNBC TV 18. In fact, he said that the company has healthy cash on books, but this acquisition will be funded via debt and cash as well. But if you look at some of the brokerage reports that have come out this morning, most of them have an overweight rating, and they believe that in the long run, of course, this acquisition will be EPS accretive. But in the short term, given the fact that the company will have to borrow from the market and interest rates being high, this will be EPS dilutive, which is why some of the brokerages have cut EPS estimates on the stock by anywhere between 4 to 6%. Now, the management has also said that Carrot Lane deal is a multi-decadal opportunity, given the fact that Carrot Lane is into lightweight jewelry making, and people prefer wearing lightweight jewelry, right? And Titan is going to kind of capitalize on that interest from the youngsters as well as people who are into lightweight jewelry. And the management has also said that the Carrot Lane market share, which is right now at 6 to 7%, will go up to 10% in the next couple of years. So that's positive commentary coming in. But if you look at the stock, Santo, it has run up somewhere around 20% on a YTD basis. And I was just going through the stock internals. The 12-month trailing PE is at somewhere around 84.7x, which is way higher than the sector PE, and compared to something like a Kalyan Jewellers as well. So I think if you look at that, maybe stock has run up a fair bit, looking a bit expensive, but I think given the kind of synergies that it can get out of the Carrot Lane acquisition, I think things are looking pretty, bright for Titan going forward.
Well, the market was, I would say, slightly indifferent to the stock today. It gained about 1%, but given that the overall momentum was quite strong, that does not seem like a very enthusiastic response to the announcement. But that again depends on market conditions. Sometimes you have the overall market conditions very buoyant, and these kind of announcements tend to fire up sentiment for the stock. But at this point, with the overall sentiment having turned slightly cautious, you are seeing interest in second line shares, but the overall, if you look at the market as a whole, it's not been going anywhere for the last 2 or 3 weeks.
That's true, Santo. I think we are somewhere around 3.5% away from the highs that we hit in July on the index.
Yeah. So in the case of Titan, if you look at it, some of the brokerages have made this point that one is A, the concern over funding, B, there's also a feeling that is this the correct valuation? Some of them have raised that point as well. It does look a little expensive at this point. And thirdly, as you mentioned, clearly the stock is already at a fairly rich valuation. Now, good stocks always tend to command higher P multiples, that's a given, but that also reduces the scope for further re-rating. Big gains from these levels, those look a little difficult.
Right.
Well, the first stock on my radar today is Cholamandalam Investment and Finance. The stock rose close to about 3% in today's market. Now, overall sentiment around the stock and analyst commentary has been fairly bullish after the company's better than expected first quarter numbers. Again, like Titan, Cholamandalam Investment and Finance too is a company which is quoting at a premium compared to the other NBFCs. Now, there are diverse views. Now, Motilal Oswal feels that the premium valuations will sustain because so far the company has shown a good execution track record, and that will help the stock sustain higher valuations. Although Morgan Stanley has rated the stock as an equal weight. Morgan Stanley's view on the overall NBFC sector is that in a inflationary environment, the cost of funds for lenders tend to go up, and in this case NBFCs tend to get disproportionately hit compared to the banks, which also have a source of funds in by way of savings and current account deposits, not so that luxury NBFCs don't have. So it has divided NBFCs into two parts, one which are attractive and the ones which are not so attractive, and Cholamandalam Finance seem to find itself on the second list.
All right, I think with that, let's take a look at the second stock that's on my list today, Indocount. Now, this stock has hit a fresh 52-week high. ICICI Securities, as Santo was mentioning when he was doing his mid-cap check, ICICI Securities has a buy rating on the stock. In fact, it has set a target of somewhere around 295 rupees a share, which is valuing it at 13 times FY25 EPS. Now, ICICI Sec believes that the worst is over as far as this company is concerned, and the recovery that it expects in FY24 is on track. And the fact that the company is well poised to capture export opportunity in global home textile trade. Now, if you look at the product range of Indocount, it includes bed sheets, quilts, other bed linen, etc., and it has a presence in top 9 out of 10 big box retailers in the US. In fact, exports to nearly 54 countries, and US is its prime market, and US Santo accounts for 75% of its revenues, and management has said that it has embarked on a strategy to double its revenues in the next 2 to 3 years. Now, if you look at total revenues for this company, 98% of the revenues come from exports, and we've seen the government take a lot of initiatives in the form of free trade agreements with various countries, and also it has come out with a lot of export incentives, and this company stands to benefit from all that. And if you look at FY23, it did the textile market did see a lot of challenges, especially in the US, given the fact that we had seen domestic cotton prices rising, and US retailers had a lot of inventory. So this, it was tough times for the textile industry, but this company managed to maintain margins of somewhere around 15% or thereabouts, even when the industry was facing challenges. And aside of that, of course, it has also reduced debt to the tune of 460 crores or thereabouts in the last financial year. And ICICI Securities believes that it is on track to reduce further debt to the tune of 420 crores or thereabouts in the current fiscal. So that way, and if you look at the stock, it is up 53% just in the last 3 months.
Well, last stock on my watch list today is Adani Ports. GQG Partners' decision to pick up additional stake in Adani Ports has clearly fired up sentiment for the stock, and strong first quarter numbers from Adani Ports that has also further helped lift the mood for the stock. Today's stock was among the prominent gainers, up by close to about 3%. Overall, analyst commentary on the stock has been fairly positive. CLSA has said that the company is focused on bringing down its net debt to EBITDA level to 2.5x in FY24. Citi has said that the first quarter performance was quite impressive despite the impact of cyclone on large part of its capacity located in Gujarat. Goldman Sachs has raised price target for Adani Ports to 820 rupees. But the biggest bull appears to be Jefferies, which has raised price target to 890, and Jefferies has said that it sees the margins for Adani Ports improving. Now, the revenues were a bit of a miss, but Jefferies says that margins will start improving once the efficiencies improve at the ports which Adani Ports has recently acquired. And lastly, the brokerage has also marginally raised earnings per share estimates, operating profit estimates for Adani Ports between FY24 and FY25 by 3 to 5%.
Yeah, Santo, GQG has been, persistently buying stake in some of these Adani group of stocks and Adani Power of late. But remember, it's the GQG stake buy that has actually had rather revived confidence in these Adani group of stocks after the Hindenburg report had soured sentiment. But Adani Ports also went through some auditor issues in the last couple of weeks. But I think the stock markets have taken it in their stride because we've seen Adani Ports make a strong comeback since last week, at least since the news of GQG buying additional stake and of course the strong earnings that you mentioned. Well, with that, we've come to the end of this edition of Closing Bell. But if you have any comments, leave them in the comment section below. And of course, come back and join us at 8:30 a.m. in the morning when we get you morning trade and get all your stock-related queries answered as well. But from Santo and me, thanks a lot for watching. For all your other news and updates, stay tuned to Moneycontrol.